I guess the wider point I'll make here is, the investing journey, it can be very lonely at times. And I couldn't encourage anyone out there more to find people that they really value for skills that you don't necessarily have. And unlike school, when they're like, oh, you can't copy their essay, like investing, you can, right? You can take someone else's thesis because you can see what they own. And the best question is ask a man what he owns, not what he thinks. And through that, you can just garner so much great signal in all of the noise. But again, shout out to my friend Jigs, and we speak closely on these kind of things. And his technical analysis is something I've grown to really, really value. And it's his influence largely that has helped me come to that conclusion in terms of a price target.
Yeah.
And he just hit me once with a phrase of like, I would just much prefer to completely outperform my price target and be happy than have a ridiculous target that underperforms me pissed off. And you're like, fair call. And when you start to study markets, you can see that they behave irrationally at times. I agree, because it's human emotion, but also it's kind of predictable. So, if I wind the clock back to 2020, and there was people like Dan Held publishing pieces that were like, the super cycle is coming.
Mm.
Cool. We got to 69 grand. Well done, Dan. The institutions are coming, Raoul Pal. And it's not these statements are incorrect. They're just noise, right? So what is the signal? Well, the signal is hash rate. Look at the hash rate. Fucking banging. All right. This thing is not, it is defended better than anything else you can imagine. User growth, fucking flying. All right. And where? Well, it's happening in places where the financial services are poor. People don't even have bank accounts in a vast majority of the world. And they're just jumping on Bitcoin like it's the best thing ever. Why? Because there's no other alternative and it works. And so those kind of things I think are far, far more interesting. Like going to Indonesian Bitcoin conference in Bali. Shout out to Dia and the team there. So I was MC at that event back in October, and you've got all these communities from across Southeast Asia, the Philippines, Thailand, Vietnam, Malaysia, coming together in Indonesia and talking about why Bitcoin's important to these people. And it's like, that is signal. And so as much as YouTube will love you for talking about ETFs and talking about $1 billion Bitcoin. But this is actually, it really gets into the meat of like, who is Jake and what does Jake want to work on? And I don't want to work on clickbaity bullshit, right? What's important? Freedom of money. That is very, very important. What's important? Freedom of speech. So Instagram will give you freedom of speech, but it won't give you freedom of reach, right? You can say all day long that central banking is bad for everyone, but no one's going to view your fucking Instagram profile, right? Because they'll just ratio you. You're gone. So, yes, let's get bullish as hell because the user growth metrics are fantastic. The hash rate is fantastic. You go and meet people on the ground. They love Bitcoin. Like it's zealots, right? We're all crazy for this thing. So where could the price go? The price could go anywhere. We don't know. But I'm very confident that with a very scarce asset and lots of money floating around that needs a home, when this thing starts to pick up pace, of course, we're going to see some outrageous days. But one of the reasons I've got the price target and the timeline is anything that happens in between now and then, whatever, right?
Yeah.
It's not going to stop me. I'm just going to sit and watch and see what happens. So we'll see, right? Yeah, the multiplier effect, really interesting concept. I love that. And the idea that like price is set at the margin, and you look at like how much Bitcoin hasn't moved in the last 12 months or the last 18 months or the last 24 months, like hodlers are holding Bitcoin. They understand this thing is scarce. And then you look at how much Bitcoin's on exchanges and it's getting smaller and smaller and smaller. And you're thinking like at some point, this thing's got to pump. And then you look at like the main problem, which is of course central banking itself. And I mean, this is some analysis I did recently. Bitcoin forces you to ask the question, why do I own what I own? And this is a purely investment perspective question, not to get confused with owning a family home, what's investable assets. Like definitely you want to separate those out, but your investable assets, why do I own what I own? And my family business in the UK is a beer and pub company. It's 240 years old. I'm the 8th generation to be involved or as a shareholder in the company. Incredible history. Since 2011, in the UK, according to the analysis I did this week, there are 40% more pounds in the system. Now, that statistic I get to by calculating data from the Office of National Statistics on something called M4. So you'll see M1 and M2 quite regularly reported by the Federal Reserve in the state. So it's relatively easy to calculate like what's the base money and what's the broad money supply, and therefore how many dollars are in the system now versus before. And like Parker Lewis is as good as anyone at explaining that situation. So go and check out his work if you haven't seen it before. But in the UK, the Bank of England stopped reporting this stuff back in 2006. Why is that? Right? You're trying to how many pounds exist? If I don't know how many pounds exist, then it makes no difference at all how an equity is performed, right? So my family business, it's still private, so I can't reveal the results specifically. But let's just say the capital growth position was circa 15% from 2011 to 2023. The amount of pounds in the system is 40% more. So in theory, I've lost 24% of my purchasing power by owning that equity.
Wow.
That's fucking bad.
Wild way to think of it, eh? The denominator is
right?
Yeah.
And so what does that mean? It's like, well, when people wake up, they're going to be selling the stuff they own because it doesn't make sense to keep it. But this is the nefarious nature of modern monetary theory, where everyone thinks they're getting rich, but they're not. We're all getting poorer slowly but surely. And what was fascinating about the increase in pounds over time was the impact of compounding. You could see in 2020, it shot up by like 12, 15% more pounds in the system. But otherwise it was like 2%, 3.5%, 1%. You know, it didn't change too much.
Yeah.
Yeah. Anyway, so in terms of like ETFs, to me, ETFs, it's, you know, oh, the super cycle's coming. Oh, the institutions are coming. Yes, it effectively opens up Bitcoin as a potential portfolio asset to a number of people that either don't want to work out what self-custody is or are regulated out of it. So that's good from a demand perspective. But, you know, next cycle, it's going to be like, oh, you know, America, the government stacking Bitcoin. I mean, there'll be something else that people are kind of attached to as a big deal from the demands perspective. But to keep the fundamentals, yeah, user growth, hash rate, and then the problem that we face, which is how do you store value over time when you're getting obliterated everywhere?
Okay. Coding in progress. It's on. It's on. Okay. Welcome
Bingo.
for round 2 there, Mr. Jake Woodhouse.
Thank you very much for having me on, Dale.
Well, okay. Let's just get this one out the gates. I must tell you that you have changed my life for the good. And I will always be super grateful for you, because I remember your Murray Randy presentation very well. You were
Beechworth, brother. Beechworth.
Oh my God, there we go. The one time I went to Victoria, I'm trying to scrub it from my brain, respectfully. And I remember that presentation very well, evidently not the town. And, you know, you shared all your data, and your goal was there to try and inspire one person to start a podcast. And at that point, I was thinking, I don't know what to do with myself. Like, I want to contribute more. Writing felt like inefficient. And at some point, like, I just thought, I'm going to have a chat to this dude. And long story short, you issued a challenge and my life's changed. And it was probably the best thing that happened in 2023. We did a year in reflection at the foreshore here shortly after New Year's. And I said that was a highlight. It ranked right up there and it's life-changing. And I'm like, I'm on a mission now. I've got a proof of concept. Some people care to listen to what I say, remarkably. And I'll be so grateful for you kicking me the ass, man. So thanks so much. Always appreciate you.
Well, Dale, I hear you. I hear you. Thank you. It's also something I wanted to say at the start of this podcast episode was it's been a real pleasure watching your progress over the last, it's not even 12 months since. So Beechworth was March of 2023. And for those listening that obviously weren't there or didn't see my presentation I put up on my YouTube at the time, Bitcoin with Jake, it was essentially a 30-minute backdoor insight into like how to produce, publish, and promote content. And my aim was to, you know, inspire one person. And there was this South African fella at the same conference essentially who got up and just did this mega pitch on how fucking scammy shitcoiners are and shitcoin media. And I was like, that guy's a legend. Definitely need to chat to him. And then before you know it, it's like, Saturday night in the pub, and he comes up to me and starts gnawing my ear off about podcasts. I'm like, come on, this is the guy.
You did it.
I'm gonna do it. No, it's just really fucking awesome watching people progress, improve, take on a challenge. And no, I wanted to begin as a guest on your show for the second time. I think I was episode number 2, and whatever episode you're at now.
39.
Congratulations. It's really fantastic to see. And I did 80 episodes on Bitcoin with Jake over a year or so, and I got so much value out of it. So to anyone else out there that is thinking about, I should create a podcast, but there's too many podcasts. My personal view is that if you think of the phrase being your own bank as one of the most crucial steps in the Bitcoin journey, like, oh my God, you can be your own bank. What does that mean? Well, I've kind of bastardized that comment, and I like the phrase being your own brand. And what that entails is essentially creating content. And you can write a newsletter, you can host podcasts, you can create different types of social media content, all incredibly easily. And look, to begin with, no one's listening, but they're like digital breadcrumbs. You think of Hansel and Gretel and that little story, or it's like an antenna, and you're just beaming out, boom, 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 this stuff. And initially, no one listens because no one knows who you are and why they should listen. But given enough time and the different networks that you invite as guests, that then they cross promote your podcast for having them on, you just build up this really interesting wave of energy that it's incredibly valuable. So yeah, awesome to see your progress, Dale. And to anyone out there that's listening or watching and thinking about, taking the plunge, get in touch. I'm happy to do what I did with Dale, which was like a kind of 30-day crash course. I just set him a challenge, like, look, episode number 1, it's got to be out within 30 days. And there was a whole lot of things that were pretty easy to do, but had to be done in order to get you there. And you did it. And that was the impetus and the kick up the arse that you needed. And really, I've done nothing since, other than just, watch with pleasure from a distance.
Yeah. But that's what
so good times, Dale. Well done, mate.
Thank you. I really appreciate that. And honestly, that's what is needed often. And in many ways, the hard yards have already been run, in the sense that now there is a proof of concept. There are people that remarkably listen each week. And I always was concerned, like, who's going to listen? What do I have to say that's unique? But it's just amazing how it's evolved, and it's genuinely life-changing. And it's initially one has to overcome a lot of self-criticism, self-doubt. Who am I? Can I actually contribute to this space? There's so many incredibly bright people. What do I have to say? But over time, you start to realize there's room for everyone. We're so early. There's so many voices that can be heard. There's so many different people that can be touched. And what a journey, man. Anyway, so I didn't want to beat that drum too hard, but I think, for anyone who's on the fence, like, just go for it. And get in touch with Jake, or get in touch with myself, and we're more than happy to show you on the way. And that's just one way you can contribute to Bitcoin. Yeah, so Jake, we had a couple topics that I thought would be really interesting for us to touch on. When I think of you within the Bitcoin space, tell us a little bit about your journey over the last, let's say, 3-4 months. I've noticed you were on Instagram for a little while, then you migrated away from Twitter for a period. I think it was over Christmas, and you've been dabbling with Nostr. I'd be really keen to understand what are the different sort of audiences that you're finding in the Bitcoin world on these different platforms. And because most of us just go to Twitter and we think that's pretty much where it is.
The main thing that I'm trying to work on is what do I want? So we love Bitcoin. Why do we love Bitcoin? Because it's just a phenomenal investment for all of the reasons that people will have mentioned on your show, the Why Bitcoin show. And it really just, it forces you to ask the question, why do I own what I own in relation to other assets you could potentially invest into? And equally, what do you do with your time? Bitcoin is amazing because it's scarce, arguably the scarcest thing that man's ever been able to own. But what's more scarce is one's time. And that is the most valuable thing we possess. And so what do I want to do with my time? Now, I'm also in a very fortunate position where I have built a net wealth that was initially from an investment, from an inheritance. My father died 15 years ago now. Shout out to dad up top. And I've made a ton of mistakes as an investor, but I mean, Bitcoin it's shit hot, and we're on. The next 18 months, if we double, spectacular investment.
Yeah.
If we triple, if we 5x, I mean, this risk reward is off the charts good. And at this point today, when I look at my burn rate as a family of 4, there are a number of things I'd like to own, including a family home. You know, really asking this fundamental question, what do I want? So after Bitcoin, I think the most important thing I could own is a family home somewhere. So owning equity in a piece of real estate, that means I don't have to deal with leasing houses, etc. And that's okay. I'll figure that out. But if I converted everything to cash today, I'd have, you know, at least a 5, if not 8 year runway before my money ran out. So I'm in a very fortunate position where I can really sit down and think, well, what does delayed gratification mean to me? I'm willing to spend some of that money for me to not have to work in a contract for someone else. And therefore, it's very, very important to me that I spend my time doing something that's really very valuable long term. And this is the beauty of Bitcoin, right? It changes everything. Like, no longer am I a kind of frantic investor thinking about like what's the way of beating inflation? Like, solved, right? Fuck inflation. We're dealing with that by exiting the old, moving into the new. Great capital growth, very low risk, highly liquid. And so what do I do with my time? And I've been drawn to a number of different things. First of all, like, done a lot of meditation. That taught me so much, like trying to really tap into like, what is my highest form of intelligence? And shout out to a guy called Sam Cathro, who's a anonymous Bitcoiner you may have come across, who I've been doing weekly coaching calls with Sama, doing deep meditation with him. That's brought up all sorts of cool stuff.
Epic.
And so yeah, let me try and answer the question in a very long answer, Dale. Thank you for your patience. What does Jake want? What does he want to do with his time? I don't know the answer yet, but I did a test. And so just before Christmas, I guess if I could summarize, so Twitter's been my main driver of social media focus. I've got like 8,000 followers on my personal profile. I built up the Bitcoin with Jake one a bit. If I really hammer it, I can generate at least 1 million impressions in a couple of weeks with tweets. So I can get a lot of attention, and I can monetize that in different ways. And the podcast content across YouTube and RSS feeds over the years, I've probably generated a few 100,000 views. So I can do that. But do I really want to do that again? And is that really the right way forwards for me now? And so I deleted Twitter off my phone. I deleted Instagram off my phone. I deleted Facebook off my phone, and left only some of the different Nostr clients. And so, you know, some of the very influential people in my life, at least in terms of thinking, like Jeff Booth, what an unbelievable guy. And you read his book, The Price of Tomorrow, and you can get him on a podcast, and he's been on a couple of my podcasts, and you can listen to him on other podcasts. And he said to me specifically, he's like, Jake, Nostr is what YouTube was 5 to 8 years ago in terms of like community building. And so in the last 2 weeks, my anxiety levels have reduced. I've got more time in my day. And that's where I think the future of content creation is. So I'll stop talking at that stage because there's a lot of stuff to digest.
There's a couple of
but
things there.
I would be like, when you talk about like really focusing on YouTube, I don't disagree that there's an opportunity to create attention using a tool like YouTube. But if you really had enough time and space to sit down and think about it, which is what I'm trying to do, it's Google. And Google are going to cancel the shit out of you the second they feel like it.
Yeah.
So you're building a business. It's like using fiat currency. You know, when you're buying Bitcoin and self-custodying Bitcoin, you're building your wealth on foundations that you can measure. And when you're doing that on Twitter or Instagram, you know, you're basically Muskie's like pet project, and the Zuck will, you know, he'll just ratio the shit out of you if he feels like it. So the point being is that, like, are these really the digital frontier that I want to be playing in from a long-term perspective? And I'm not so sure. Whereas when you get onto Nostr and you start thinking, okay, well, what would it look like? Like, I've just posted a few things. I've been sent a few zaps. That's like a genuine micro payment of Bitcoin, bearer asset, no middleman, can't be stopped. Could you get rid of the advertising model from media? And what would that mean if you could? And then it's like, okay, well, how do you host your content for Nostr native posts? And so, you could use YouTube, right, for video hosting, but you could also use Anchor on the back end of Spotify or iTunes or whatever other RSS feed you decide to use. But they could be switched off if someone chose to. And so what would it look like to build like the Nostr version of Anchor? So people could host their own content, access through private keys, which they could never have switched off, and monetize it using micropayments. So I don't know. It's a crazy wild west out there, and there's lots to go through.
Yeah, that's a fascinating sort of take. I mean, I suppose you've touched on several things. Let's start with the last thing you touched on there, Nostr. I was listening today to a pod and Matt Adele was talking about it and saying it feels like Bitcoin did in the early days. And it's a bit rough and ready. It's obviously very small. It's a very small group of people that are on there. The UX and the UI is not exactly compelling, but once we get into version 5, 6, 7, 8, 9, 10, eventually it'll just be so intuitive and simple that people will start adopting it. I have not spent the time there, but I think what you say is extremely valid, and it's something that I've thought a lot about. And it's like, today, where are the eyeballs? They're definitely on these Silicon Valley based social media companies, whether it's the YouTubes and the Twitters of the world. The attack vectors, the risks are obvious. All it could take is a shift in policy. We don't do any Bitcoin content. Boom, your business is dead. You don't have a business. So I've often thought, okay, well, you're producing the content. The content's always going to be yours. It's the distribution of that makes it's worth distributing it in a diversified way. This is where diversification might actually be a good idea. So I'm thinking that Musk is going to not necessarily toe the line relative to the Instagrams and the Googles. So I think maybe that could be a little bit of differentiation. But the ultimate is, of course, Nostr. And then that brings in the whole concept of zaps and value for value, as you described. And there's a fella who runs a podcast called Mere Mortals. And, he was at the Brisbane meetup describing how, like, literally this is how he lives. Like, people listen to his pod, they stream him Bitcoin, and he sells the Bitcoin to fund his life. And he's actually gotten the pod to that point. And I look at Fountain and, I've got 70 odd thousand sats. I don't know what the dollar value of that is, but that's over 8 months. So I'm like, it's not working for me, and maybe I'm not doing enough promotion. But so, in that sense, like, I feel like you're directionally very right. The future does lie with these other platforms, like the Nostrs. I guess that the immediate challenge that someone in my position has is like, I want to move now. I want to switch from fiat money into this. How does one do that quickly? We have had discussions, I believe, you and I, about real estate within a portfolio. And despite me actually having been in the game of real estate for like a decade, having a master's in property, I think it's the worst investment as an investment. But as a home, I feel like it's a totally different kettle of fish. You did something that I thought was incredibly brave and ballsy, but it comes with some downsides. So talk us through that journey that you went through where you had a bunch of properties, I believe in London at some point, and then you had a property in Victoria, in Melbourne, and then you've liquidated your entire real estate portfolio and shifted into Bitcoin. Yeah, tell us about that story, because I don't think a lot of Bitcoiners give enough credence to the idea of owning your own home. I think they poo-poo it a little bit too much.
Yeah, wow. I'm smirking because I'm like, I could kind of like just soundbite the last statement there and just say that is financial advice, i.e. sell all of your real estate.
Yeah.
So I guess I could wind the clock back a bit. So in my mid-20s, I received an inheritance after my father died. And the reason I got that inheritance was because we had some real estate. So it was a beautiful property in the south of the UK that had been in the family I would have been the fourth generation to own it. As the eldest son, came to the difficult decision, but like no doubt still the right one, which was we couldn't afford to stay there. And I didn't want my mother, who was only 48 at the time, my father was 48 when he died, like having to live in his tomb. Like that just didn't make sense to me. So we decided to sell. There was like all families, there was lots of opinions about what should or shouldn't have happened. And money, makes all sorts of people do weird things. But ultimately, I ended up as a mid-20-year-old and I got given some money. Like, what the hell do I do with this stuff? And I put 50% of it into real estate, and I put 50% of it into a wealth manager in central London. And hands down, the worst investment I've ever made was in real estate.
Which year was this, Jake? When did you first sort of get into that space?
I bought 2 flats in London in 2014, and I sold them both in 2022, and I made a loss of the equity position of some, I don't know the exact number because I fucked up the mortgage at some point, but over 50% of the equity gone. Yeah, horror show. And we're talking like, 6-figure number. It's horrible. So in 2021, 2022, you're sitting there and you're basically like any investor. I had overvalued shit on my balance sheet, and I was completely unaware until I went to get liquidity for it. And so real estate is illiquid. Doesn't matter what people tell you, it is only worth what someone will pay for it. You can get as many valuations as you like, you can mark to market if you like, but when the day comes that actually you don't want it and the market's not there, market's not there. So I made the mistake of leveraging up, doing refurbishment work on properties that didn't substantially increase the value of those bits of real estate. And then the market went against me. So I bought one flat in West London that was, the average square meter price in 2021, 2022 was already something like 15 to 20% under 2014. Jeez. So much like when people say, you shouldn't leverage up on your crypto, like, because if it's like anything, the trend is your friend. If the bull market kicks in, you're fine. But if it goes against you and you're in debt, things, don't look so nice. So I had a very difficult decision to make, which was either you hold and you think you might get maybe 10% next year and you kind of like inch your way out of the hole that you're in, or you go, okay, I'm selling and I'm buying Bitcoin. And so I did that. That's exactly what I did. So the flats that I had in the UK, I eventually found buyers. One of them also, there was a horrible, horrible story where a ex-council block in Notting Hill caught fire. So the Grenfell Tower incident, that was, I don't know how long ago now, in the last 5 years. Awful. Families like jumping from the 60th floor. It was terrible.
Yeah, I remember that.
The reason it caught fire was some stuff called cladding attached to the side of the building. And so all across London, there was all these flats or blocks of flats that had cladding on them. And if you had cladding on your block, you had to get it replaced. And if you had to get it replaced, then it meant that there was no way of people getting new mortgages. So I owned a flat in a block that was covered in cladding that, there's 400 flats in there or something. And I took a big haircut to get out of that position because I'm not waiting around for the government to. I saw some of the emails between the managing agent for the block and the flat owners, and they would like, they had thousands of pounds that they had to come up with. It's like, well, guys, we're not going to. No, we don't have the money to pay for this. So what's the moral of the story there? 1, market went against me. 2, taking on debt is not the no-brainer that people will make out. 3, you're buying a physical thing that has all sorts of things that can go wrong with it. Now, it's a long story. I won't go into my other flat and the drama that I had there with some shared costs that I had to pay and all the rest of it. But those are the flats. So I sold them. And it's simple. The opportunity cost is, okay, the equity position is down today versus cost. If I don't sell, what could that equity position be in 2 years, 5 years, and 10 years owning Bitcoin? And you're looking at like a magnitude difference. It's like, well, it's a no-brainer, right? Once you've got that convinced, it's the same old story. The more you know, the more you buy. It's like, this is dumb. I own the worst. I don't want this stuff. I want this other thing. And then so here in Australia, so we bought a property in a suburb of Melbourne in 2019. I arrived and old Danny Andrews, that was actually one of the highlights of us for 2023, is that prick disappearing.
Oh, that was a huge highlight. Yeah.
Oh God, he was I hated him.
Oh God,
The
I know.
We hit the lockdown, so we had a really nice 3-bed property that had been renovated recently. Our first daughter Ruby was born at home. We've had 2 home births now, and basically we got cabin fever, and we were living in a neighborhood with some neighbors that just it wasn't right for us long term. So the sell to my wife was, we can go and rent a nicer property in a nicer area, and we invest half of it in Bitcoin, and then we can live off the other half, and happy days. And that investment thesis is, so the equity position is 2.5x up in Bitcoin. So that's a good start, right? The problem
When did
though,
you make that trade? So you bought in 2019.
the auction for the property was in Feb of 22. So we sold then,
Okay.
and the settlement date was July. So we then did a DCA July, August 2022. And the real estate in the UK that I sold, I eventually got liquidity in October, November. So I was buying October, November 2022. And also I did some buying for my family investment trust in Jan, Feb of 2023. So when Celsius was cratering, when FTX was cratering, I was just buying as much Bitcoin as I
Lucky
could.
boy.
Oh, it was just awesome. Awesome. Everyone's looking the other way, thinks this thing's dead and gone. And I'm like, this is the best thing ever. The difficult thing, and I must share this, and as you touched on, like Bitcoin is poo-poo family homes. I owned a piece of real estate that I could have lived in for longer had I chosen to, but because of the lockdown kind of hangover, because of the neighbors issue, it wasn't right for us long term. So I'm still okay with that decision. But we've now lived in 1, 2, 3, 4, 5 properties as a family, young family, since what is July of 2022.
Sure.
And right now, I'm in between 12-month rentals in Melbourne. We're in our third Airbnb of the Christmas period. In fact, on the 27th of December, I found myself with 2 cars packed full of shit, with 2 kids and a wife, and no home. And that was definitely, definitely 2 of the hardest days of my marriage today. So
Sure.
it's not easy. So that sure, Bitcoin's flying, but as my wife says, you cannot live in a Bitcoin. And she's quite right.
She's spot on.
She's quite right. But I still maintain that for us to get the property that we really want to live in the area that we want to live in, that was the way to do it. And like, ironically, everyone's like, oh, you're taking so much risk. What are you doing? Loading up on Bitcoin, selling all this other stuff. But I have less debt now, like arguably almost zero debt. And I think the risk reward is far better this way around.
Totally.
So yeah, it's like, I don't know. We make plans, and plans don't come as we expect, and then you have to, rejig. So
Pivot.
yeah, we'll see where it goes.
Yeah, it's such a good story, and a kind of welcome reminder to the realities of life, and how you just, as your wife says, you just can't live in a Bitcoin. And I can relate very much so, in the sense that we moved 7 times in 5 years, moved interstate twice, and it's exhausting having to deal with agents, not knowing whether or not the next year you're going to be able to stay. Typically, the best homes for rent are the ones that are owners who are just renting it out for a year. The investment properties, I find, tend to just be kind of your bog standard, very typical properties. Whereas we always said, look, we're homebodies, we love being at home, we want something lovely. And that typically meant renting somebody's property who was going to come back. And so literally that's happened to us like 4 times in Australia, and it was exhausting, man. And I kept on, pushing, I guess, what you were saying, in the sense of like, look, if we can just hang on, we can get a much better property wherever you want. We just, we've made the allocation. We just need time. And then the market did what it did in 22. And I was like, oh, fuck Sam Bankman-Fried. You've totally destroyed my plans. And, as things transpire. But I can just say, generally, from my perspective, that I would say your primary residence is a lifestyle asset, and it shouldn't even be a consideration when you evaluating your overall portfolio. And as hard as it is for us Bitcoiners to part with corn for the purpose of a deposit, however big or small that might be, I think that the lifestyle benefits are so significant. And the real trade-off that you got to make is saying, look, you obviously don't want to over leverage, and that means you got to sell more Bitcoin. It's a bit of a fine art trying to strike a balance. And at the same time, all of us have partners who are not necessarily as bullish as we are and as confident as we are. But I think that your thesis is going to work out absolutely beautifully if I think what happens, if I think what's going to happen with 12, 24 months. And the real pain that you've endured will, in the rearview mirror, appear as it was all worth it and part of the journey. But as you're experiencing it, it's bloody awful, isn't it?
It's really hard. And that's a great point. So shout out to Mark Moss. So Mark's been a coach of mine the last couple of months as well. I didn't mention him so far on the call. And he teaches that one's family home is not part of your investable assets. And funny enough, no one had taught me that. So yes, I've been managing an inheritance for now, 10 years plus. You're making this shit up as you go, right? You don't have a dad any longer. You don't have a teacher.
Yeah.
You've got books, you've got YouTube videos, you've got, advisors and agents and whatever else, but everyone's packing their own bags, not necessarily yours, and no one takes long-term responsibility for the decisions you make. So it's you've got to be careful out there, right?
Yeah.
And so one of my big lessons from this experience is that the family home is not an investable asset in terms of your portfolio. Now, the difficulty is, of course, that, ironically, I sold a family home 15 years ago. And here I am now with 2 kids and a wife and in need of a family home. And it's like, did I really mean to do that?
Yeah.
And I still believe it's the right decision to have made. But as you say, rearview mirror will come back, but that was the right call. But it's hard, and I also see, this is the way of the world at the moment, like shit rental properties costing thousands of dollars a week. They haven't had money spent on them for like 15 years, 20 years, some of these things. And they want $2,000 a week for a 4-bed house in Bayside,
the right
Melbourne.
area. I mean, that's it. Yeah.
And you're like,
and you're like,
I refuse to pay you that.
Yeah.
Like, this is insane. But even, my mother-in-law is looking for a smaller unit at the moment. And she's seeing some cases like 30, 40 groups turn up at one viewing for a rental property. And so the world is going mad. And this is fiat currency sending everyone crazy, where the denominators, it's crumbling in value all around us. But most people haven't really understood that there's a problem with the money. And they're just like, and especially with like the urban inner city suburbs of Melbourne, where there's like good schools and there's good family networks and people have this like prestigious thing they're trying to buy into. I speak to dads in playgrounds like all the time about this. I'm like, but where's everyone getting their money from? And we're all fucking renting in areas we prefer to buy in. And the properties are getting more and more expensive. And it's like, well, how does this make any sense? And so for me, Bitcoin was one of the vehicles that could actually get me back into a space where I could be a potential buyer. And I don't see anything else that would potentially do that. Now, of course, you can make more speculative investments if you so choose in the rest of the scam that is the rest of crypto, or equally, any other area of particular edge you might have as an investor. But it's a wild time at the moment. Like how people are keeping their heads above water, I do not understand. And how the Australian property market is not half the price it actually is right now, I do not understand. Like, how does debt triple and prices don't really do anything? That's mad.
It's not a free market. That's how. It's a completely manipulated market, and it's a political market. It's a protected category of investment that will never be allowed to fail, because 80% of Australians' wealth is tied up in their primary residence. And so can you imagine the shitstorm that would be kicked up if you're the politician who says, look, we need to make housing actually affordable, and not through some pitiful, we're going to give 5,000 people a first-time home buyers grant or something like that. Those are just putting little plasters over it. Like there's like a gaping wound with maggots infested in a soldier's leg. Maybe he's got no legs now, and they're just coming around with a little band-aid trying to fix it. And it's a chronically broken market, and it's Bitcoin, as far as I can tell, is the only non-speculative investment that will enable people to get on the property ladder if they so choose. Failing which, I think you're dead for the most part. Between 2020 and 2023, that's when it all went to shit, as far as I'm concerned. Because I used to look at Australian property and go, 850 buys me something magic. 800 is now the median home in Brisbane. And that's not even in a nice area with it's a nice home. Like where we live, it literally ranges from ancient shit boxes, which will need to be totally demolished and built up. And those are 750 up to 1.5, 2 on the foreshore. So you're like, who's buying this stuff? And, you know, especially as young people, it doesn't surprise me that they're turning to things like socialism and other sorts of ridiculous ideologies when the system's just not working for them. And, you know, the 10th largest bank in Australia is the bank of mom and dad, because the boomers have got a stunning ride. They're riding a monster equity position. But for the poor millennials and Zoomers and whatever generations come later, like, I really worry for them. And it's a very strange one, because everything I learned at uni about efficient markets and how property cycles work, booms and busts, because of the delay. The reason why property goes through pretty significant booms and busts that are predictable in theory is because by the time there's a lot of demand that's evident in the market, developers are now starting to get approvals, and there's a long lag period between all that stock coming on, and then suddenly it all comes on, and then there's excess stock, and then it puts, you know, downward pressure on prices, and so the cycle goes, and then there's not enough property, and then, you know, then you start seeing the prices rise again, and blah blah blah. It doesn't happen here. It's a straight. It just keeps going up. It's kind of little dips in here or there, but man, I could rant about it all day. But I think your point earlier is just spot on. Like, in the absence of Bitcoin, I don't have another bet. And yes, there are other things out there. You could go and chase Boink coin or Mickey Mouse coin and hope for 1000x, but
some garbage.
Yeah, on an asymmetric level, and I don't think Bitcoin is speculation at this point. There's nothing else. So when I think of your move there, Jake, I think it was brave, and I think your wife deserves a medal when she gets out on
She
the other
does.
end of
Shout
this.
out to Lozzie.
And shout out to my wife as well, because she's also had to put up with this. Trust me, babe, this is going to work.
Jules. And just one final point, I guess, is I'm not a trader. I'm not looking for speculative kind of overnight success here and there. And right now, I'm mid-trade of a kind of 2 to 3 year play, which is okay. I mean, I was so pissed off the 2021 bull run was as poor as it was, like 69K. Are you kidding me? Right? I thought it'd be like double that, right? At least. And it didn't happen. But ironically, the bear market after that was so much lower than I ever thought it would go again. Like sub 20 grand, like, whoa, US dollars, right? In the back end, Q4 of 2022. Brilliant. So ironically, I was able to accumulate more Bitcoin than I ever expected to because of that lack of true blow off top on the previous bull market. And I'm currently mid trade, and that is I sell these other assets, load up on Bitcoin, ride that fucker for the next 3 to 4 years. And I'm looking, because my wife's like, what's the price going to be? And I'm like, well, look, you can't, it's like, stop answering a question with more questions. And so my price targets are 150,000 Aussie dollar a coin, August of 2025. So my feeling is that no one knows the price and the time. Like, you're an idiot if you think you do. But that's roughly what I put in place. In particular, it's the timeline. So, you know, you can look at the rational root in his work, and shout out to my close friend Jigs as well, who's an excellent technical analyst. And there's just so many useful tools, like Checkmate as well, like some great stuff you can run through. So like when the market's getting up, when it's getting down, what's a good time to get in, what's a good time to get out. And so generally speaking, I'm looking at that kind of August next year to take some crust off the table. And hopefully it'll be like, you know, it depends how high we've gone, right? You just don't know. So DCA out over a 2 to 3 month period, maybe. And some of that will go towards a family home, without a doubt. But it just depends how much and where we want to be and all that kind of stuff. But I'm feeling the back end of, don't worry, babe, we'll sell the house and we'll rent. Thinking that renting was like totally chilled. Renting is not totally chilled. And that's I guess the summary is I'm mid trade. I'm not changing the strategy. We'll carry on. We'll ride it out. We'll see what happens. I still believe Bitcoin is the fastest horse in the race with the least risk, and therefore everyone wants to get as much of it as they possibly can. What they choose to do with their increase in purchasing power depends on them. But a good place to put your money, other than Bitcoin, is of course a primary residence to live in, to enjoy life, to have your kids, to be safe, and that'll be my that's my primary objective.
Yeah,
as it stands in terms of reallocation. But yeah, shout out to my wife. What a fucking legend.
I know these ladies who and gents in some cases, although judging on numbers that I've seen from Anita, Posh, and others, like still 75-80% of audiences tend to be male, and we're the ones who tend to be the ones talking incessantly about Bitcoin. So I give so much credit to my wife for all the support, and she came. One of my favorite moments was, I think,
what's the price gonna be?
Episode 3 with JP. She listened on the way back from like a sewing class or something, and she was like, "Baby, I'm so proud of you. I'm a Bitcoiner now." And I was just like, that was one of the best moments I've ever had. And I was just like, it was like, I thought, it's not to say I didn't believe you, but I really get it now. And I'm like, oh my gosh, this is
JP's brilliant at explaining Bitcoin, actually.
Yeah, no, and he just had
what a cool guy.
magic rants.
Shout out to JP.
I think, you know what, I actually am surprised by your price prediction, because I think that is pretty bearish. And I think that if you've kind of sort of positioned expectations within the domestic setting at 150 by August 25, I think that you're gonna come out looking like an absolute genius, because truthfully, like, I'm expecting that like quite a lot sooner, much sooner. It wouldn't surprise me if we got there in 2024, August 24. There is talk of now. I mean, let's talk about these ETFs, because I've got an episode coming out next week with British HODL, and just like some of the numbers that people are throwing out, the inflows, the money multiplier. I mean, like, is that not like factoring into your equation, and makes you think like there could literally be a stampede, like an omega candle, as Samson Mao talks about? I mean, is that sort of, or is this like you just kind of trying to figure out, I want to make sure that I'm putting something very, like something that I think is really achievable? You know what I mean? Like, you don't want to set expectations to the roof. Are you just trying to watch your own, temper your expectations there?
Yeah, so I guess the wider point I'll make here is, the investing journey, it can be very lonely at times. And I couldn't encourage anyone out there more to find people that they really value for skills that you don't necessarily have. And unlike school, when they're like, oh, you can't copy their essay, like investing, you can, right? You can take someone else's thesis because you can see what they own. And the best question is, ask a man what he owns, not what he thinks. And through that, you can just garner so much great signal in all of the noise. But again, shout out to my friend Jigs, and we speak closely on these kind of things. And his technical analysis is something I've grown to really, really value. And it's his influence largely that has helped me come to that conclusion in terms of a price target.
Yeah.
And he just hit me once with a phrase of like, I would just much prefer to completely outperform my price target and be happy than have a ridiculous target that underperformed and be pissed off. And you're like, fair call. And when you start to study markets, you can see that they behave irrationally at times. I agree, because it's human emotion, but also it's kind of predictable. So, if I wind the clock back to 2020, and there was people like Dan Held publishing pieces that were like, the super cycle is coming. Cool. We got to 69 grand. Well done, Dan. The institutions are coming, Raoul Pal. And it's not these statements are incorrect. They're just noise, right? So what is the signal? Well, the signal is hash rate. Look at the hash rate. fucking banging. All right. This thing is not, it is defended better than anything else you can imagine. User growth, fucking flying. All right. And where? Well, it's happening in places where the financial services are poor. People don't even have bank accounts in a vast majority of the world. And they're just jumping on Bitcoin like it's the best thing ever. Why? Because there's no other alternative and it works. And so those kind of things I think are far, far more interesting. Like going to Indonesian Bitcoin conference in Bali. Shout out to Dia and the team there. So I was MC at that event back in October, and you've got all these communities from across Southeast Asia, the Philippines, Thailand, Vietnam, Malaysia, coming together in Indonesia and talking about why Bitcoin's important to these people. And it's like, that is signal. And so as much as like, YouTube will love you for talking about ETFs and talking about $1 billion Bitcoin. But this is actually, it really gets into the meat of like, who is Jake and what does Jake want to work on? And I don't want to work on clickbaity bullshit, right? What's important? Freedom of money. That is very, very important. What's important? Freedom of speech. So Instagram will give you freedom of speech, but it won't give you freedom of reach, right? You can say all day long that central banking is bad for everyone, but no one's going to view your fucking Instagram profile, right? Because they'll just ratio you. You're gone. So, yes, let's get bullish as hell because the user growth metrics are fantastic. The hash rate is fantastic. You go and meet people on the ground. They love Bitcoin. Like it's zealots, right? We're all crazy for this thing. So where could the price go? The price could go anywhere. We don't know. But I'm very confident that with a very scarce asset and lots of money floating around that needs a home, when this thing starts to pick up pace, of course, we're going to see some outrageous days. But one of the reasons I've got the price target and the timeline is anything that happens in between now and then, whatever, right?
Yeah.
It's not going to stop me. I'm just going to sit and watch and see what happens. So we'll see, right? Yeah, the multiplier effect, really interesting concept. I love that. And the idea that like price is set at the margin and you look at like how much Bitcoin hasn't moved in the last 12 months or the last 18 months or the last 24 months, like hodlers are holding Bitcoin. They understand this thing is scarce. And then you look at how much Bitcoin's on exchanges and it's getting smaller and smaller and smaller. And you're thinking like at some point, this thing's got to pump. And then you look at like the main problem, which is of course, central banking itself. And I mean, this is some analysis I did recently. Bitcoin forces you to ask the question, why do I own what I own? And this is a purely investment perspective question, not to get confused with owning a family home, what's investable assets. Like definitely you want to separate those out, but your investable assets, why do I own what I own? And my family business in the UK is a beer and pub company. It's 240 years old. I'm the 8th generation to be involved or as a shareholder in the company. Incredible history. Since 2011 in the UK, according to the analysis I did this week, there are 40% more pounds in the system. Now, that statistic I get to by calculating data from the Office of National Statistics on something called M4. So you'll see M1 and M2 quite regularly reported by the Federal Reserve in the state. So it's relatively easy to calculate like what's the base money and what's the broad money supply, and therefore how many dollars are in the system now versus before. And like Parker Lewis is as good as anyone at explaining that situation. So go and check out his work if you haven't seen it before. But in the UK, the Bank of England stopped reporting this stuff back in 2006. Why is that? Right? You're trying to how many pounds exist? If I don't know how many pounds exist, then it makes no difference at all how an equity is performed, right? So my family business, it's still private, so I can't reveal the results specifically. But let's just say the capital growth position was circa 15% from 2011 to 2023. The amount of pounds in the system is 40% more. So in theory, I've lost 24% of my purchasing power by owning their equity.
Wow.
That's fucking bad.
Wild way to think of it, eh? The denominator is
right?
Yeah.
And so what does that mean? It's like, well, when people wake up, they're going to be selling the stuff they own because it doesn't make sense to keep it. But this is the nefarious nature of modern monetary theory, where everyone thinks they're getting rich, but they're not. We're all getting poorer slowly but surely. And what was fascinating about the increase in pounds over time was the impact of compounding. You could see in 2020 it shot up by like 12-15% more pounds in the system, but otherwise it was like 2%, 3.5%, 1%. You know, it didn't change too much.
Yeah.
Yeah. Anyway, so in terms of like ETFs, to me, ETFs, it's, you know, oh, the super cycle's coming. Oh, the institutions are coming. Yes, it effectively opens up Bitcoin as a potential portfolio asset to a number of people that either don't want to work out what self-custody is or are regulated out of it. So that's good from a demand perspective. But, you know, next cycle, it's going to be like, oh, you know, America, the government stacking Bitcoin. I mean, there'll be something else that people are kind of attached to as a big deal from the demands perspective. But to keep the fundamentals, yeah, user growth, hash rate, and then the problem that we face, which is how do you store value over time when you're getting obliterated everywhere?
Okay. It's so interesting you say that, because I actually dabbled in a bit of Nostr today, and I saw something that Lynn said, and she said, I always call her like by her first name as if she knows who I am, Lynn Alden. She will one day. That's the plan. And Lynn was saying, like, whenever somebody asks her about the ETFs, she goes, meh, I'm more interested in what's happening on a community level. And that's something that she's been talking a lot about. Like, and she specifically mentioned the conference in Indonesia and all the circular economies that are happening around the world that are springing up. And initially there were only a handful, and now we're seeing it sort of growing quite exponentially. So she says, like, you know, yes, the institutional narrative is one thing, and it's interesting, and it will lead to price go up and all that jazz. But she's in it as much for, I think, freedom go up and the people, I guess, who need it the most. You know, while you were telling your story about the, you know, buying your house and, oh, I don't know what to do with this, and then selling it and all this, I had this like little smirk on my face. And I'm just thinking of people that I know in this exact position. And I've got my besties own an investment property that they don't even call a property, they just call it an Airbnb in the heart of Cape Town CBD, in this messy street where all the kids get wrecked. And, you know,
awesome.
they I know. So it's a pretty narrow sort of base of people who would be interested potentially in purchasing it. But the idea here is that it lost a lot of equity, and then you said something like, and this is going back a little while now in a discussion where it's like, how do I inch my way out of this? And you know, you're looking at your family business and going, well, yeah, okay, it's grown 15% of the last since 2011, but look what's happened to the money supply. What I try to relay is think about, okay, you might have to take a bit of a haircut on your property when you sell it, and this is the South African property. So, but think about the loss of purchasing power in US dollars, because it continues to melt. You know, the exchange rate continues to deteriorate. I've been here 5 and a bit years, and the South African rand is 20%, 25, and maybe 25% weaker relative to the Aussie dollar during this period. And so that's just a long-term trend that happens. So internationally, you're getting poorer every single year that you own an investment property in South Africa. So don't even worry about the nominal capital growth you're getting. Then worry about all the rands that are being printed. Then worry about all the dollars that are being printed. And then start thinking about the opportunity cost of just taking a little baby haircut and smash it into Bitcoin. So that's what I'm hoping to do when I see them now when I go back, because I'm like, honestly, this could be a ticket. But it goes back to what you were saying again there, Jake. It's like, yeah, you know, knowing what you own and why you own it. I think very few people are.
Just going to switch the light on down. Hang on.
Yeah, no worries.
You can't really see me, can you?
Oh, don't worry.
Keep it going. We're good.
There we go. All right, now I can see your beautiful shaved head.
Do I now look like I've got?
There we go.
That weird, like down.
Now you look like a proper convict. I can see a little light there, like there's wisdom, additional wisdom flowing.
Go this way, whatever.
There we go.
Doesn't matter, does it?
It's all good, man.
Yeah, no, this is the new skinhead. New year, new me.
A new you.
Sorry, Dale, just your last point. So any investment anyone owns, they can do a nominal analysis on the performance of that investment. So what's been the capital growth or lack of, what's been the yield or lack of. Now, whether it's an equity, whether it's a bond, whether it's a real estate investment, doesn't matter, right? Do your nominal analysis. The next step is don't stop there. You've got to do the real. So what is the money supply change in the duration of your analysis? If you don't take that step, you can't possibly understand if you're actually protecting capital or not. And the third, almost more important, is the pound, this is not quite the case, but most of the world is really run by the US dollar. So it's like you have to do your initial nominal investment analysis, then you got to do your real investment analysis based on your local currency, and then you got to do a third one, which is then international FX rates. And so how much has the rand depreciated versus the US dollar?
Yeah.
So, and it's, if you haven't done all of that analysis, you're not actually looking at the true capital return. And so the scary thing is, and I'll go back to my family business. So what happens there with a 240-year-old business? You go to them and say, guys, in the last decade or so, we've lost 25% of the value of this business. Oh no, we haven't. Oh no, we haven't. Like it's clear as day, right? And it's terrifying. And in some ways, like, I'm having to really be very careful because it's highly emotional, but I have to sell them. That's the result, right? Am I an investor or am I not? And if I'm an investor, then this is not a business. This is actually some kind of social enterprise that's slowly losing the capital position. Why? Because central banking is nefarious as fuck, and the world is essentially disintegrating around us because of the money. Or you try and persuade them to become a Bitcoin company.
I was gonna go there.
Maybe.
I was gonna go there. I was gonna say, like, you could become the sort of Bitcoin Bedford, but the beer company of Bitcoin in the UK.
Badger Beer is the name of the brand.
There we
It's
go.
an awesome company, so much heritage, so much history, but no one's asking these questions, Dale. And it's very confronting when you do ask them, because people are like, what are you talking about? And the answers that you get they're not easy answers. It's not an easy answer to go, oh, I'm going to sell my company after 240 years of my ancestors building it. Like, sure. You can't do that.
No.
Well, maybe you have to. I don't know. Like, no one's paying attention anyway, right? And as a minority shareholder, like, what can I do to influence the decision making of the business? I don't know. But that highlights nicely. Well, I actually think that in theory, a pub business could be a sat stacking machine. So this is a cool concept. I wrote some stuff last year about this. I call it Bitcoin is pizza, or pizza is Bitcoin. Shout out to my friend Michael, who is a restaurateur, and he was running a brilliant pizzeria here in Melbourne, and like just delicious pizza, great vibe. He was the manager. Him and his now fiance have got some investment, and they've started their own restaurant like a few doors down. I haven't yet been. I have every intention to go when I can. But like, how does Michael scale? Well, traditionally, it's like, get a second venue. Okay, well, how do you make sure the vibe is top notch if you can't be in two places at once? How do you make sure every pizza is great quality when you can't be in two places at once? How do you be the front of house in two places when you can't be there, at the same time? You can't. So really excellent business operators, they're incentivized traditionally to scale up with additional physical locations and to replicate the back end of the business somewhere else, which works to some extent. But when have you ever been to a chain of restaurants that are just as good as the other one? Right? And I'm talking like actually good, not going to McDonald's that's like a factory of garbage.
No, it's
and the same applies with us as a beer and pub company. So we started making cider for the British Army in 1777. Can you believe that? This guy called Charles Hall, and his granddaughter married a Woodhouse. So the company's called Hall and Woodhouse. And over the years, like, if you're a good brewer, the way to market was through a pub. So we started owning and running pubs. And at one stage, we had almost 250 pubs across the south of the UK. Now that's shrunk back down to somewhere like, I think maybe 175 or something that we currently own and manage. Some of them are freehold, some of them are leased, some of them are on a different type of tenancy. But the point is scale was achieved through additional locations. And that was how you made more profit. Now that Bitcoin exists, how does that change things? Well, you could sell loads of great pizza. And with the operating profits, you could buy Bitcoin. And what's the risk reward of Bitcoin versus another pizzeria? No brainer, right? Bitcoin all day long. Same applies to someone who's great at making beer, or someone who's great at like delivering a pub lunch, or someone who's great at haircuts, or someone who's great at running a cafe, or you name it, right? In my view, what is going to happen is people now have access to startup like returns, which is the returns of Bitcoin over the 5 to 10 years ahead of us, at a risk that is lower than opening a second location of whatever their expertise may be, a florist, for example. So why couldn't it be the case that local neighborhoods get revitalized and people spend their time doing what they really love and building products that's what they do, right? You get artisans, they're absolute specialists at what they do, and their excess labor gets stored in Bitcoin. Now, in some ways, what's happened to me is I'm a few years ahead of most people in this sense. I've been able to take an inheritance, so stored energy from a previous generation, and I've pumped it into Bitcoin, which I now have a better view or a more confident view on the future. So I'm thinking, what do I do with my time? Do I really want to like chase views on YouTube to get cancelled? Like, is that really what I want to do? And like say that Bitcoin's going to $1 billion, like for growth? Is that? I mean, maybe. Where's this ramp going? The point is I think Bitcoin will help to liberate people to a more localized economy, and we'll get less like scaled crap that just isn't very good at scaling and isn't great at quality control, etc. So yeah, great subject. I don't know if any of that resonates with you.
No,
Dan.
it does, because, I think there are going to be people who have an edge and they know how to build and scale things that have locations. Like, I think automatically to like, like a retailer who's expanding their presence, whether it's a pet retailer or whatever it might be. They know their business. They, like, if it was a Coles here in in Australia or whatnot, they know how, they've got a growth plan. They know how to roll out stores. They got specialists across the board. They've had many learning lessons. For a new guy, a person who's got a single location, should I take a punt and open up a second location, or store any of my operating profits beyond distributions into Bitcoin? It's such a no-brainer to me, just from a quality of life perspective too, as well, right? I mean, think about not only the risk, the execution risk of a small business now trying to grow from
And your time.
and then it's your time. And I mean, anything that involves people is going to be incredibly hard. And with respect, the vast majority of people, especially in those roles, tend to be transient and have no vested interest in the well-being of your company long term. So you're constantly sourcing people, retraining them. I mean, to give you an example, my dad's involved in some private equity stuff, and one of which is a pet business, and they have a staff turnover about 40% per annum in retail.
Wow.
So, and they're a good operator. They're a really slick operator. And so that just means is that constantly, like literally training people is one of the 3 or 4 things that they have to do that's fundamental to the success of the business, failing which they literally are just bleeding staff and they can't grow. So yeah, I think there's an interesting opportunity there. The missing piece of the puzzle though, Jake, to me is obviously knowledge and conviction, because for you and I sitting here who've done the thousands of hours that we have, we're looking at that and going, why would you bother with a South African investment property when you can own Bitcoin? Why would you bother why would you own an investment property in Australia? Why would you bother trying to expand your little pizza shop into a new location and then worry about staff and execution? Just buy Bitcoin. But the reality is they're not there. They're not there. And there's no shortcut from what I can tell. Like, you can show people, yes, over any 4-year period, Bitcoin has enjoyed 100% returns at the very least over any 4-year period. Just pick the 2 dates. But I mean, that's just one piece, but you need to do the time. Do you know what I mean? So I think that's one of the more challenging aspects I have with Bitcoin, in the sense that we have almost an asymmetry of information, in the sense that we've dedicated thousands of hours to this thing. So it enables us to take what others perceive as a highly risky speculative bet, and for us going like, actually, this is the opposite of risky. This is low risk, because I can actually trust this thing and it works. And not only are the returns phenomenal, I actually understand this thing and how it works and its incentives, and it's a beautiful machine. And the more you attack it, the stronger it gets. And look at all these metrics; it's stronger than ever. So yeah, therein lies the key challenge. And maybe that goes back to the original point of we need more podcasts, because I don't necessarily resonate with everyone. You probably didn't. And, not everyone's going to want to listen to Stefan Livera or Matt Odell. There's plenty of different voices that are going to reach the pizza guy, the florist, the everyday mom and dad business, or just the average employee who no longer needs to think. I mean, here's something that I think is huge. And maybe you can give me your thoughts on this is, super. Like a lot of people talk about, here in Australia, like so many people, I call them the living dead. They kind of go to a job they don't enjoy, and they get their sort of 20 days worth of leave, and they
Mm.
enjoy their barbies on the weekend and watch the footy and, drink shitloads of beer. And
Slavery.
it's just like fiat slaves, really. And you're not living your dream, you're living somebody else's dream. You're not designing a life. But there's a sort of like hypothetical reward in the end. And you've entrusted 11% of your stored energy as it stands today. That's the contribution for super to these third parties. You don't know what's in it. You don't have a clue. And not only are they like performing poorly, they're actually making horrific bets. And I think that the massive opportunity for young people in Australia is, even if you've got a little pitiful pitiful little super, to convert that into Bitcoin. I think that is probably one of the single most powerful things you can do in your life, if you want to give yourself that ability when you're older to sort of literally strip that worry away. Because I think all it takes is maybe like, if you can get yourself to half a Bitcoin and you're in your early 20s, you're working, my God, man, I think you'll be golden by the time the government allows you to retire in your 70s.
Yeah, the super one's interesting, isn't it? I have a self-managed super for a very small amount of income that I earned over 18 months in a job in my last shipbroking company that I worked for. But that's, for a lot of people, that's the only pool of capital they have. And yeah, I mean, I completely agree with you, essentially. I've spoken, I got a little coaching program I was running at the back end of last year, and a guy that was part of that. You can do it in the UK, so it's part of your pension scheme there. In the States, it's the same. So for a lot of people, they're not investors, right? They don't really have anything to invest, and their pension pot is the only pool of capital that they have. And so figuring out how to get that into Bitcoin is really key. And I know of people that are doing it all over the place, right? You can do it here in Australia, you can do it in the UK, you can do it in the States. And in some ways, it's a loophole that I don't think the governments quite understand what it
The
means.
hack.
You can self-custody Bitcoin in a pension, which means that if the government was insolvent tomorrow and actually didn't print more money and did actually go bust, you could still walk away with your value. Whereas anyone that had anything in the super industry would just be gone. Just vaporware overnight.
They could just
And
take a
super ones,
haircut. The government could,
yeah, I mean,
I think the government could do, because
they'll come for the super industry so soon, right? I mean,
they're going to say we
the
want to
easiest cash cow for them.
Yeah, we want to do, and they're already hinting at it. We want to transition Australia to, net zero by X date. We need to make all these investments, even though all the investments today, it's heavily subsidized, have failed to achieve the targets that they want. We're now going to suck all the value from people's time. And well, guess what? You're not going to suck any value from our SMSFs.
Yeah, you can't get it off me, mate. Yeah.
No. So I think it's an enormously powerful tool. And the interesting thing is that in some countries, like in South Africa, you're not even allowed to invest more than 25% of your pension in offshore assets. So they have to be locally domiciled. So your future is imprisoned within this jurisdiction. And there are prescribed limitations. You have to have a certain amount of bonds. You can have a certain amount of equities. And so,
Wow.
and it's all
It's
like,
bullshit, isn't it?
yeah. And I mean, it's typical socialist bullshit, because they know the capital flight is just going to be real. I mean, who's going to stick their money in the local exchange? But I see all these things coming to the West in time, but it's like a slow motion car wreck. And I reckon they're going to close the loophole. I think it's a loophole. I think it's a hack. I think it's ill thought of, because I don't think, it's one thing saying, yes, you can custody your own gold or art, but I don't think people quite understand how literally I could send $1 billion across in 10 minutes.
No, they don't get it. Definitely
No.
not.
So yeah,
So
that's,
Dale, there was actually something you reminded me of that I'd like to touch back on, if that's okay.
yeah, go for it.
We were talking about, like, you touched on again this concept of like more podcasts, and another thing that I've been trying to figure out is, not to bash YouTube for getting likes and views. Like, it ultimately doesn't matter how you get attention, really. If you can monetize it in a sensible way and you enjoy doing it and it doesn't burn you out, then happy days, right? The more sovereign you can be with your day-to-day life, the better. So everyone can make whatever decisions they want in that sense. But the one of the biggest things for me is not being in a fiat contract for employment. That is like getting my own time back and not being on 20 days of the year. And I'm, admittedly very lucky to be in that situation. But one thing that I'm concerned with by Nostr is it is so early. And yes, it's fun deleting apps and all the rest of it. And yes, it's fun to really try and take a load time preference view. And like, what does delayed gratification look like? What does a media business of the future without advertising look like? These are really fascinating questions to start asking. But what does it mean if, as content creators, we withdraw from the marketplace of ideas? And the marketplace of ideas is Twitter, is Instagram, is TikTok, is YouTube. Like that's really where the bulk of the attention is. And I don't know what the right answer is, don't get me wrong. I think of like historical context being, the coffee shops of Amsterdam and London and writers and artists getting together and getting high on drugs 200 years ago. And that was like their little place where they got together, and some of the literature that came out of that, or the different spice routes and the Silk Roads and all of these little trading hubs, and like people they communicate and they congregate in their little corner of wherever the world might be based on their interests and their passions and their expertise. And so in some ways that's what Nostr is, right? It's like, I actually heard Preston Pysh describe it as the resistance recently, which made me think of like Star Wars. But it's people that believe in freedom of money, aka Bitcoin, and it's people that believe in freedom of speech, and they're there already. So if you go and choose to engage in that community, you're straight away, you're part of it, and that's awesome. But how do you get more people over there? And in the same case of Bitcoin, like how does the guy who's excellent at running a pizza joint have the time to figure out what Bitcoin is and how he might have a better life from it? Well, one of the ways of doing that is remaining in the marketplace of ideas. And that's why I encourage anyone that's out there that's thinking of standing up and having a part of this conversation publicly to do it, because you immediately bring in your network of family and friends. Like my family and friends will know that I'm into Bitcoin as a result of starting a podcast. Now, a lot of them stopped listening ages ago because they just didn't want to listen. And that's okay. And that's one of the things that you as content creators got to get over, the fact that your family don't give a shit about it. And I don't mean that in like, oh my God, like, what does it mean if I say all this stuff? They're just not going to listen. Literally, they won't.
No, they're not listening. No,
they do not care.
No,
so like your friends and family immediate network is the lamest excuse to not start podcasting, because they don't listen, from my experience. Maybe one or two things here and there they might listen to, but it's individuals that step up within their own communities that have gone down this Bitcoin rabbit hole individually, in private. They've made a reallocation. They're getting closer to it. As I mentioned before, the more you buy, the more you know. I'm going to start a podcast. Great. Dan and I could get you up and running in under 30 days. We'll be your first 2 guests. And you can have 10 guests booked, and you do 1 a week for the next 10 weeks, and bang, you started a podcast. Well done. It is so easy to do, should you choose to put some time and effort into it. And I think it's those grassroots characters. They pull in their friends and family to an extent, but they'll also resonate digitally with different kinds of characters. And that, I think, is really magical.
That's the key. So everything you said makes sense there. And I was singing from the same hymn book, because I came into Bitcoin partially through greed, but partially through fuck you. Because I started learning about CBDCs and all this kind of thing. And I was like, you are never going to tell me what to do with my money. And so it started from that position. And so people that know me know that I'm a freedom warrior. I call myself a lone wolf. I don't care. Everyone in the class today, after our gym session, after our boxing, was doing all the stretching, and everyone's doing compliance stuff. And I'm like, fuck it. I've got a podcast. I'm leaving. And I don't care what you think about me. So like, I've always been this guy. And so at a deep philosophical level, like everything about Bitcoin just speaks to my body. Like, I love it. And I hate the Silicon Valley companies in so many ways. I think they're just they're just cucks. They're mouthpieces for government. But I need them, because I've got a message, I've got a goal, I've got ambition, and I'm not going to do that through Nostr. I'm only going to be speaking to Bitcoiners. And Bitcoiners are not going to make my dreams come true, like in a real sense. They're a tiny community. Frankly, they don't need to hear what I have to say. I'm not trying to persuade anyone to do anything, but I need people that are different. I need to bring mainstream people in. I want more people to understand Bitcoin, and they find Bitcoin on the platforms that have network effects. YouTube's not going away. Neither is Facebook, neither is Instagram. They might not be as fashionable or cool for people like you and I, because we go, they're totally censored. There was nothing that came out of those platforms during the pandemic that was true. Like, I looked in and going, it's all bullshit. I have to look so deep in the internet for real information about this worldwide flu. So I have such deep distrust of them. My kind of view is, you know what? I'm going to do my best to get on several platforms, and I will let the chips fall where they may. What will be will be. If they want to pull the rug from under me, then c'est la vie, boy. I've just got to.
Yeah,
Yeah, this is just the way it is, because I need to go where people are. It's like I'm going fishing, and I'm not going to go to this tiny little pond where I can get 2 or 3. I want to get loads of people, and
yeah,
it just means that the proprietor of the pond could just suck all the fish out and drain the swamp, and suddenly I'm a loser standing on the side.
yeah, fair play, and that's
Yeah.
totally reasonable.
Yeah.
When I reflect, so it's not live any longer, but I had a website called bitcoinwithjake.com, and I had 3 sections to which you could listen, read, and watch. And it's basically all of the content I've ever consumed in relation to Bitcoin that I found valuable. So it's hundreds of hours of stuff that you can go through. And what you watch is largely YouTube, and what you listen to is largely Spotify. And those were the 2 platforms that I was using to consume that information. So Bitcoin is freedom money. I was able to use 2 centralized digital monopolies to get the information I needed to understand it in a way that I needed to make a large reallocation from traditional assets into Bitcoin.
Yeah.
So it's kind of that thing, isn't it, where as entrepreneurs at the cutting edge of something new, figuring out problems and solutions all day long, you play the playing field that's there. And if we know that there's the potential for a rug pull, then that of course like helps us to self-censor in some ways, but also like because you're aware of the threat, you can kind of manage it in a sense. But yeah, this is very much the kind of discussion I'm having with myself about, like, because I think ultimately this comes back to life force and our attention. So where do you point your life force? And all of those social media platforms are dead tomorrow if no one put their life force into them. But they monetize your attention. You are the product. I don't know anyone that feels good when they put Instagram down. Or equally, like how I find myself trawling through YouTube Shorts at like 11 o'clock at night, watching Roy Keane and Gary Neville talk about Premier League football. I mean, it's just like, why am I doing this?
Yeah.
But it's the dopamine hit every time, right? Instagram Reels is the same thing. And so what I think is interesting about what Nostr could do is, because it's decentralized, because it can't be censored, because there aren't yet any algorithms, and because you have the freedom to choose which client you view the information through, the user is in control again. And that's interesting.
Yeah.
And so, you go back to like a Peter Thiel talking about 0 to 1. Nostr is a 0 to 1. So as entrepreneurs looking at like, well, how did Spotify get built? How did YouTube get built? In fact, when did Google start? And I think there are actually companies that are starting today in and around the Nostr ecosystem that will be the future of Google. Like we do web browser searches today, and you get all these different web links. You got to search for the information yourself. Like, how long is it going to be until you've got an AI bot for Bitcoin? You've got an AI bot for Nostr. You've got an AI bot for any topic in the world you could possibly imagine. You may have even trained it yourself. You need to search for anything. You just type into your AI, what's the issuance schedule of Bitcoin? Poof, out it comes. What's the money supply increase of the British pound? Out it comes. And so the way that the internet is built and is evolving is fascinating to me. And that's like a proper paradigm shift that, I don't know, I find it very compelling. So we'll see where it takes us.
Yes.
And just a very fundamental concept so I had a friend, for example, worked for Channel 9, one of the Aussie broadcasting companies, and he was part of the advertising team. One of his customers was Coles, for example, the supermarket. And he said to me, he said, "Oh, Jake, no, the news desk is independent from the ad desk." I was like, "What do you mean?" And he genuinely believed it at the time when he told me. It's like the news team is essentially that's the eyeballs grabber, right? It, and that's paid for by advertising. So if they go and run a story that says that Coles has been underpaying their staff, i.e., a negative view of Coles, well, he's going to get a phone call from his guy at Coles. Like, why the hell is that on your channel?
Yeah.
And inevitably, they're self-censoring themselves, right? And so the media business model of create attention, sell adverts is flipped on its head when you get micropayments in Zaps on Nostr. So in the future, in the same way that Patreon works, but that's still on fiat rails, why couldn't it be the case that Dale Warburton runs the Why Bitcoin show and you get paid live in a bearer asset in Zaps for the content you create? Now, of course, difficulty is how much attention is there and how much value could we create from that. But when I come back to life force, it's like, okay, there's just so much stuff you can read about writing a good hook, or like what information we spoke about ETFs and like outrageously bullish Bitcoin price predictions. Like if you put so and so says, $1 billion Bitcoin by a certain date, I can almost guarantee you get a better result from YouTube than if you put Jake says use Nostr. Like the
Oh, Jake,
wording
I mean, of
changes
course.
things. Like the way that we create content is we're optimizing for that, right? We want to try and go viral on these platforms, and subconsciously we start doing it. And so it's just like, what if we take a step back and there's this new model? Where does that take us? So yeah, work in progress, Dale. But it's
So
very interesting to think through
fascinating.
what it might mean.
Yeah, fascinating. And there's no right answers. And I guess it's a moving target and things are going to change quite dramatically.
Mm.
You make so many good points there with regards to Nostr. And I think you did mention to me that Jeff Booth had told you at the time that's where you should be spending your time and energy. So I am pleased to hear
Yeah, I
that.
did an interview with Jeff. When was that? So I did a holiday to the Gold Coast. I'm going to say August last year, and that's
Yeah.
when Jeff was really talking about Nostr. So, like, let's say 6 months ago.
Yeah.
But that's just one touch point. It's then more like what I've experienced by not having the social media apps on my phone. I
Mm.
feel better.
Mm.
That's a change. Like I was constantly on Twitter, like constantly, right? I mean, you'd like log in at all sorts of random times a day, and equally, like when you create content, you'd be like checking your YouTube studio to see what like results you've got, like or whatever you might do, right? And it's
Man.
still that like it's that like the dopamine hit, the anxiety, then the like feeling sad, like every emotional trigger's been hit in a short space of time by a mobile phone like 100 times a day, which used to happen, once every 2 months as a saber-toothed tiger came into the camp. So
It's
it's just very interesting to see
yeah.
how like and that's why I think it comes down to that fundamental thing of like one's life force. Like, do you know what I mean? If you point in a different way, it starts subconsciously manifesting as something slightly different,
Mm.
and you optimize for like because you'd optimize for the zap instead of saying subscribe now, you'd be like chuck us a zap. You know what I mean? Your content
Yeah.
would change.
Yeah.
Anyway,
Totally.
to
That's
your
what I've
point
been
though, Dale, to
thinking.
really hammer it home, I think the status quo today in I made about 10,000 Aussie dollar in sponsorship contracts on B2B basis from Bitcoin with Jake over, I think, about 6 months. So shout out to Danny at Fast Bitcoins and Daniel at Hard Block sponsored me for a month, and also Matteo at Orange Pill app. Those guys, they supported me with some sponsorship funds over the life of Bitcoin with Jake. I think I made about $25 on Fountain.
Yeah. It's just this,
So
you know, it's this
it's like
reality,
what's
man.
the point, right? What's the point putting it on Fountain if the goal is revenue in that sense?
These are all the things that we're grappling with, and like you're so right about what I've come to realize, and it's led me to sort of question the kind of content that I produce, because it's like people don't care about freedom and that sort of thing. Like I have like Anita Posh was a guest. If you
Mm,
compare what Anita's clout and the work that she's done relative to some other guests that I've had who are lesser known, they've had exponentially more views than Anita's
mm,
just by virtue of the content, the topic. People are like not interested in freedom.
mm,
People don't care. They want to know
Well,
how they can enrich themselves. And so anything that's got a number, like I learned this in shitcoin media. If you want to get people to click, you got to trigger their fear and greed. You got to have a number in a headline. That's exactly the point. Any sort of headline that says this and this by that date works. And if you don't play that game, then you don't accrue the views. And I think there's a delicate balance that Bitcoiners are trying to reach within the space by being true to the ethos of Bitcoin, by not being clickbaity YouTube tools, because there's a lot of them, and at the same time producing content. Because you'll look at the absolute banging content that Swan puts out, and it'll be like 10,000 views. And then there'll be some guy called Crypto Fuckface, whoever his name is, and he's got like 60K. And I'm like, who is this person? You're a non-person. You're like not serious. And you're like, you got a big, like scary face. You know what I mean? Like one of those, like with the big Bitcoin sign. And I'm like, God damn it. I hate that stuff. So it is what it is. So I'm grappling with it right now because I'm sort of going, that is where people are. And I'm trying to be as true to form as I can. And I invariably end up trying to figure out, it steers the way my conversations goes. It steers the type of guests that I select because it's all driven by the incentives. And there's no solutions. There's only trade-offs here because if I were deeply principled, I would abandon all those platforms. I'd be all over Nostr and Fountain, and I'd probably have a 50th of the audience.
Yeah, well, nice one, Dale. Thank you very much, mate. Thank you for having me.
Okay, that was cool, man. No, I really enjoyed it, and
good to get back on a podcast.
Welcome back to public life, Mr. Woodhouse. And
sorry, guys.
really,
I had to bunker down for a few months and figure some stuff out.
No, I think you're gonna come out stronger in the other end. I have all the confidence in the world, man. You've got
well, another good phrase that I like is either you win or you learn. Never lose.
Yeah, totally. Is that Jocko Willink?
Anyway, I'm going to stop talking. I've got to go and let my wife into the bedroom because it's late.
It's late now. We'll tell her.
Come on, mate, 10 o'clock.
Hello, thanks very much.
Thank you very much, mate. I appreciate you having me on. Thank you.
Oh, no, it's been really cool catching up, man. And we look forward to seeing you on stage at Bitcoin Alive.
Yep, that'll be end of March. Yeah.
Awesome, man.
And you.
I'll be on the side stage. Managing
on debut.
There we go, my debut show. The rookie in the house, but very
don't fuck it up.
I won't. I'll try. Oh God.
Nah,
all right, Mr. Woodhouse, thanks so much, man.
It'll be easy. All right, take care, Dale.
Appreciate you, man. Take it easy. Cheers.